Hello everyone and welcome back to the channel. My name is Brent and in today's video we're going to be doing the M1 Finance dividend portfolio recap of the week for the 14th to the 18th of February 2022. We're going to go ahead and hit 5 topics very quickly. Number 1, the overall performance of the M1 Finance portfolio. Number 2, the weekly performance of the portfolio. We're going to go ahead and hit the top three performers over the overall performance and the weekly performance. Number 3, we're going to dive into the activity. What stocks did we buy? What stocks did we sell within the last week? And what dividends did we received over the course of, say, the 14th through the 18th, right? Number 4, what is the current portfolio dividend income? I know this is something that's really interesting to kind of, I like to monitor it because it kind of showcases your performance, not only your stock market performance, but your portfolio's dividend income, which I think is a really fun portion or part of investing in dividend companies. And then number 5, what stocks are we planning on buying this week? Here we are on Tuesday, February 22nd, and there's a lot of opportunity out there. So I'm going to go ahead and cover 5 companies really quickly, and I'll let you guys be the judge of which ones you should maybe consider buying. So with that said, if you guys are brand new here, definitely go down below, give this video a thumbs up, subscribe if you have not yet subscribed, and let's go ahead and get into the video. So yes, of course, I'm still here at M1 Finance. Okay, so really quickly, number 1, the overall performance. We're up 63.98%. We can see that our market gain is $7,354, and our earned dividends is nearly hitting $3,000. Within the next week or 2 weeks, our earned dividends in this portfolio should now break $3,000. So, every year since we started this portfolio back on January 8th, our dividends have just continued to increase week after week, month after month, year after year. So this is really cool to see. Our earned dividends on a yearly basis started very small, but here we are 4 years into it, and we're breaking nearly $1,100 in dividends, but we'll cover the full amount here on number 4. So that is the overall performance. Our best 3 performers here are Apple, Main Street Capital, and Lowe's. So Main Street Capital and Lowe's really battle it out here. Main Street Capital just overtook Lowe's for second place. So yeah, really interesting little battle going on right there. Our worst 3 performers is number 1, Clorox, down whopping 22%, but they are having a bit of a turnaround here within the last week. I think they're up 2%. We'll go ahead and cover that here in just a second. Digital Realty Trust is down 1.29%, and Merck down 1%. So that is the overall performance. Now, number 2, the weekly performance. Weekly performance, our portfolio is down 0.15%. Now, it's actually down slightly more than that, but we did earn some dividends on the week, so that kind of offsets some of the total loss that we had. But overall, we can see that it's not a bad percent loss for the week. We're down 0.15. If I compare that to the S&P 500, it is down 1.58%. Year to date, it is down 8.76%. The Dow Jones here is down 1.9% and down 6.22% year to date. And the NASDAQ here is down 1.76% and it's in the worst spot this year to date, down 13.4%. So our portfolio being down less than 0.25%, not bad at all. So I'm really happy with the performance here on the week. And here, as we were kind of discussing earlier, our best 3 performers here are Cisco up 6.14, Methode Electronics up 5.47, ABM Industries up 5.28, and we see Clorox here. Clorox is making that rebound up 4.52%. So those are our 4 best performers here on the week. And you can see there's not a lot of green here. We have 25 holdings. This is roughly 10 positions. And we can see our portfolio is mostly red here. With our worst performers on the week are Pfizer down 4.43, IIPR down 3%, Lockheed Martin down 2.46, and J&J down 1.92. So overall, we had some really strong gainers, which helped offset those losers. And really for the week, we're only down slightly. Now jumping into number 3, the activity for the week. Now we did buy 1 company. We bought some Johnson & Johnson, and as we just saw there, J&J was down for the week. So this could be another opportunity to buy a little bit more of J&J. We'll go ahead and showcase that here in just a minute. Colgate, Hormel Foods, Main Street Capital, Realty Income, and AbbVie all paid out some dividends this week. So we had what, 5 companies pay out dividends. So if we add all these positions together, we make a whopping, let's take a look. I think it's over $50. It looks like over $50 here. So 677 and 1374. So yeah, there we go. We got $52.08 in a single week from these 5 companies. Now, Realty Income is a real estate investment trust, a REIT, and they pay out monthly $6.77. And Main Street Capital is a BDC. It pays out every month as well, $8.54. So these companies here together alone nearly pay out $15 in dividends. And then on a week or on a monthly basis, we can also have other companies paying us out in between there. So Colgate, Hormel, and AbbVie pay out on a quarterly basis here, but they're nice little companies as well. So $52.08 in dividends there on the week. So that is number 3. Moving into number 4, the current portfolio dividend income. Now we have 25 holdings within this portfolio. If you guys are interested in taking a look at this portfolio yourself, there will be a link down in the description below. Actually, go into the comment section, look for the pinned comment. I always update my descriptions. Sometimes I overlap other stuff in my descriptions. So there will be a pinned comment with a link to my portfolio. If you guys are interested in seeing all the companies in here on your own time, there'll be a link right there. And let's go into number 4. What is the current portfolio dividend income? So here we are. I updated this as of last week's purchase on Johnson & Johnson. This is all up to date. So here we can see up at the top, our portfolio value is $40,902. And we can see here up at the top, $40,902. So this is on the dot, exactly our portfolio's dividend income. So our annual income for this portfolio, based off all the companies, all the shares that we own, is $1,131. So that's not bad right there. We recently crossed $1,000. Here we are, we're now breaking $1,100. And in the upcoming weeks, we could look to be breaking $1,200. So I'm really looking forward to that. I'm kind of calculating how much dividends I'm expecting by the very end of this year. Like, what is our annual income going to be by the very end of this year? So I can kind of look at that. You know, I can kind of expect it, right? We have a cap of how much we can invest of $6,000. Our annual income right here, we're not going to make it all by the end of the year. We'll probably make it on a quarterly basis, you know, a little bit there. So I'm going to say that we'll make probably say $1,000 of that potentially throughout the year. We'll reinvest it. So in total, we'll probably have roughly $7,000. Well, we will have $7,000 worth of capital going into these shares this year alone. So I'm going to go ahead and increase that by a yield. Our average yield that we're buying this year is pretty low. We're probably buying around 2%, 2.5% yields on companies. So I'm going to increase this by 2.5%. So I'm expecting roughly the portfolio annual income to increase by $175 by the very end of this year. So yeah, I'm expecting to break $1,200. And then we may potentially, by the very end of the year, break $1,300. So we'll kind of see how this kind of plays out by the very end of the year. But I can expect to hopefully be breaking $1,200 and then be after $1,300 of annual income by the very end of this year. So that is the annual income on the M1 Finance portfolio. Now, what companies are we buying? Number 5. And for this, I went ahead and going to cover 6 companies with you guys just very quickly. Some of the basics here, kind of showcasing where they're at right now, their 200-day and 50-day moving average, and their current yield and their earnings per share over the last 12 months. So this is the trailing 12 months here in the pink. So Starbucks, number 1, they fell off those highs of roughly $126. They're now trading at $93.34. We can see here that the 50-day broke underneath that 200-day and they just lost it. They're still trending down at $93.34. Their 200-day here is at $111. And this is still kind of in free fall, right? But their yield on cost here is at 2.01%, which it's not the highest. So you can see that it did have a high of 2.6%. But that would mean that the share price is down here below $60. So that would still be another drop of roughly $30. But I'm thinking that Starbucks, while it is falling right now in the short term, you can see that its earnings per share has recovered. It's continuing to recover quarter after quarter. It's looking like it's moving to the upside. They've had really successful turnaround coming out of that 2020 and reopening. So here we are in 2021, their first quarter earnings, their second quarter earnings, third quarter earnings, and here we are in 2022, expected to just continue moving, trending higher. I'd have to really look into this company to see did their performance, did their earnings have a little bit of an issue? Is that why they fell so hard? But this is just kind of creating an opportunity. There's not very many times when you're going to get Starbucks for a yield of 2%. So this is just, giving you guys an opportunity to look really quickly. J&J right here, their share price is at 163.36. It doesn't fall below that 50-day, 200-day too often, but when it does, hey, this could be an opportunity to buy. It could also fall a little bit more, but it doesn't fall hard. You can see here in 2020, that's the furthest it fell. It fell down to about 110, 120-ish area, then quickly bounced back and has been on this trend line. And it does have occasions right here along the way where it trends below the 200-day, 50-day moving average, but then for the most part, it kind of trails above. Here we see a double bottom. The second double bottom is actually a little bit lower, potentially showing some signs of weakness. But here in the short term, we saw that the green, the 50-day moving average, actually crossed over the 200-day. So this could potentially be a nice little run in the positive direction, after it kind of gets through with the volatility. The market has so much volatility in the market, so anything can be expected, but their earnings per share had quickly recovered coming out of 2021 and continuing to move higher here going forth. Microsoft here, now their company recently took a fall. It is now trading below 50-day, 200-day as well, but their earnings per share is moving to the upside. This company, I wouldn't consider this really cheap, right? I may consider it a little bit of a discount off their highs, but I wouldn't put this in undervalued at all. Like, I wouldn't consider this undervalued. This would need to drop down to say $160, $140 for me to really consider it, say, undervalued. I think that this is fairly valued right here. We can see their earnings per share is continuing to blast off to new highs. They are offering a ton of services, products, and it's no longer perpetual where you buy a license and it's yours forever. Now they're having you pay for a lot of their services, sign up for contracts. So they definitely increased their sources of revenue for Microsoft. Skyworks Solutions, this one's trading below 50-day, 200-day moving average. We can see this one may have a reason for pulling back. We can see the earnings per share took a quick turnaround, and it is now kind of dropping slightly. But we don't have any sort of we haven't hit any sort of like a little bounce or recovery. Right now it's in free fall. It may potentially stop in this $130 range. We can kind of see some support right around this level back in 2020, but this could be one to kind of take a look at, just watch and observe if it does have a bit of a bounce back and just kind of trend for a while or move back up to that $200. This could be an opportunity to buy, but it definitely has pulled back off those highs of $200, now down to $136.58. Nvidia, kind of the same thing here. It had highs breaking $300, but despite their earnings per share continue to grow, their share price did fall. So here they're at $236. They bounce off the 200-day moving average, kind of slightly recovered, hit the resistance wall of 50-day moving average, and fell off that. So now they're kind of trending in this line right here, but they may end up having like a little, showing signs of support, showing signs of resistance, and they'll be in this channel right here until they can break over the 50-day moving average, close above it, and then kind of continue on from there. But again, this is a really high trading company right here. I really don't know the price where I would be comfortable dumping a whole lot of capital into Nvidia. But if you were just brand new, starting a position in this company, just kind of averaging into it, this could be an opportunity. Just kind of average just a tiny bit into it. And then if it falls a bit more, average a bit more, and so on until you kind of build up that position. And then air products and chemicals here, this one kind of fell off those highs as well. So it had a trend where it was over $300 for quite a while. It broke $300 in 2020, $300 in 2021, and here we are 2022. It had kind of had a little period there in the $300 mark, and it's now trading well below $300 at $241.97. So it's had these earnings per share kind of dipped throughout 2020, 2021, and their share price kind of showcased that it really didn't go anywhere, right? They dipped in earnings per share. Their share price kind of fluctuated around, kind of moving this pattern. And then here they are in 2022. Their earnings per share is actually kind of moving higher versus 2020, 2021. But their share price collapsed below where it had been during 2020, 2021, despite them actually being better off with their earnings. So this one is showcasing a 2.48% yield, which is actually better than any time really over the last 3 years. You can see here the yield is 2.48. It really hasn't been since about 2019 or so since this company offered a 2.5% starting yield. And you can see that the earnings per share is continuing to move up. Quarter after quarter, just had slow potential growth for the upside. So those are the 6 companies I kind of wanted to showcase with you guys very quickly. I don't want to take up too much of your time, right? But I am planning to add a new position into my portfolio. I'm really taking a look at J&J. I do like this. I would really like to see actually a bit of a bottoming out period here, showing some signs of support. So while actually I'm not going to be adding to Starbucks at this moment, I had considered it. You know what? It's such a small amount. Yes, I'm gonna do it. I don't foresee them falling off a cliff. They may see some signs of support here in the $90 range. So this is actually not a bad time to buy for me. Right? I'm gonna buy them at $90. They're at 93. If they fall, I will probably average into them. I don't have a lot of capital to invest at this moment, so putting $179.74 towards Starbucks at this time is really not that bad. So here I'm going to go ahead and add a slice to my pie. I'm going to go ahead and type in SBucks, go ahead and hit that, add it to my basket, add it to my portfolio, go ahead and select all, equalize all my positions, and save that. Go ahead and confirm my positions. This is all updated since I saw that last. Then I should have Starbucks in my portfolio now, right here. I'm going to go ahead and select Starbucks, select buy and sell. Go ahead and make sure that I have buy selected. Go ahead and put in the full amount there and continue and confirm. So while it's not a lot, right, $179, if it falls here and continues to trend lower, say $80, $70, $60, I'm going to be buying that probably over the next course of, the weekly, over the next few weeks, and kind of building up my positions, building up my shares. I probably won't do like a huge dump into this account unless the whole market tanks another 30% again. I probably won't be putting like a large amount up front into positions, or something along those lines. I really don't foresee myself dumping like $3,000, $5,000, $6,000 into this account and just kind of throwing it at the market right now. I'm going to slowly roll capital into this portfolio into positions that I feel are opportunity in the short term, and I can just kind of build up those positions in the long term. So Starbucks is one of those positions I feel good invested in at this time, and if it falls more, that's fine. I'll just average more into it, lowering my cost basis, increasing my yield on costs, and increasing my overall shares for that company. Basically increasing your dividend income overall. So that is it for this video. Let me know down in the comment section below. Are you interested in buying some Starbucks, some J&J, Microsoft, Skyworks Solutions, NVIDIA, Air products? Let me know down in the comment section below. I'd really like to hear you guys' feedback. I thought these would be some interesting positions to kind of take a look at, and they all kind of fell off their highs. So they're not trading at all-time highs right now. They are pulled back slightly. So do a little bit of work, do a little bit of homework, look into these companies and see for yourself if any of them are interesting to invest in. So with that said, I really thank you guys for tuning into this channel, this video. If you guys are brand new here, go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time I release a brand new video, and of course, give this video a thumbs up, make it blue. I appreciate it, appreciate you, and I will see you guys in the next video. Bye-bye.